China to become largest economy by 2028. The great leap forward achieved by China in the crucial economic field is now an acknowledged fact. The result of the great strides taken by China has resulted in predictions that China will overtake the US as the world's largest economy before the end of the decade, after outperforming its rival during the global pandemic. For some time, an overarching theme of global economics has been the economic and soft power struggle between the United States and China, and COVID-19 pandemic and corresponding economic fallout have certainly tipped this rivalry in China's favor. China's skillful management of the pandemic, with its strict early lockdown, and hits to long-term growth in the West, meant China's relative economic performance had improved. It is accordingly mentioned that the value of China's economy when measured in dollars to exceed that of the US by 2028, half a decade sooner than it expected a year ago. The outstanding factor in this context is that China had bounced back quickly from the effects of COVID-19 and would grow by 2% in 2020, as the one major global economy to expand. While the United States was likely to have a strong post-pandemic rebound in 2021, its growth would slow to 1.9% a year between 2022 and 2024, and then to 1.6% after that. On the other hand, the US economy is expected to contract by 5% this year, allowing China to narrow the gap with its biggest rival. Overall, global gross domestic product is forecast to by 4.4% this year, in the biggest one-year fall since the Second World War. Other Asian economies are also shooting up the league table, and the lesson to be learnt by Western policymakers is that they need to pay much more attention to what is happening in Asia rather than simply looking at each other. China's share of global GDP has increased from 3.6% in 2000 to 17.8% in 2019 and will continue to grow. China would pass the per capita threshold of $12,536 to become a high-income country by 2023. Even so, living standards in China will remain much lower than in the US and Western European countries. In the US, the average per capita income is just over $63,000, while in the UK it is just over $39,000. Japan would remain the world's third biggest economy, in dollar terms, until the early 2030s, and Germany will go down from fourth to fifth. The United Kingdom, currently the fifth biggest economy, would slip to sixth place from 2024. It is also mentioned that departure from the EU would not prevent the UK, likely to be the world's fifth biggest economy in 2020, from being one of the better performing economies in the next 15 years. It is forecast that the trend rate of growth for the UK is to be 4.0% annually from 2021 to 25 and 1.8% annually from 2026 to 30 and 1.8% annually from 2031 to 35. By 2035, UK GDP in dollars is forecast to be 40% more than that of France, its long-standing rival and neighbour. It is also mentioned that departure from the EU would not prevent the UK, likely to be the world's fifth biggest economy in 2020, from being one of the better performing economies in the next 15 years. It is forecast that the trend rate of growth for the UK is to be 4.0% annually from 2021 to 25 and 1.8% annually from 2026 to 30 and 1.8% annually from 2031-35. By 2035, UK GDP in dollars is forecast to be 40% more than that of France, its long-standing rival and neighbour. However, despite a hit in 2021 from its exit from the European Union's single market, British GDP in dollars was forecast to be 23% higher than France's by 2035, helped by Britain's lead in the increasingly important digital economy. It is also mentioned that departure from the EU would not prevent the UK, likely to be the world's fifth biggest economy in 2020, from being one of the better performing economies in the next 15 years. It is forecast that the trend rate of growth for the UK is to be 4.0% annually from 2021 to 25 and 1.8% annually from 2026 to 30 and 1.8% annually from 2031 to 35. By 2035, UK GDP in dollars is forecast to be 40% more than that of France, its long-standing rival and neighbour. One factor that is emphasized in economic forecasts is that environmental issues would start to have a serious impact on the shape of the world economy over the next 15 years, following a period in which the effects of global warming had become apparent more quickly than previously feared. Sea levels are expected to have risen by 45 centimeters from the 2000 base by 2035. This compares with the smaller 20 centimeters rise by 2030 predicted 2 years ago. With more countries making plans to make the transition to net carbon zero economy in the coming decades, there would be weaker demand for fossil fuels and lower oil prices. It was predicted that the cost of a barrel of crude would fall below $30 by 2035. Economists also see an economic cycle with rising interest rates in the mid-2020s that would pose a challenge for governments which have borrowed massively to fund their response to the COVID-19 crisis. One factor cited for China's march forward is the report that the EU and China are close to reaching a long-awaited business investment deal. The pact, expected to be finalized this week, will give EU firms better access to the Chinese market and improve competition conditions. Talks on the investment deal began in 2014 but have been stuck for years over a number of issues, but rising trade tensions between the US and China may have helped change the Chinese position. The deal comes hot on the heels of the UK's post-Brexit trade agreement with the EU, which was agreed on December 24. The deal would open up China's manufacturing sector to EU companies, as well as construction, advertising, air transport, and telecoms. One of the sticking points was China's demands for access to the EU's energy market given sensitivities over national security. The deal is expected to give Beijing access to a small part of the European renewable energy sector on a reciprocal basis. The pact is also designed to remove barriers to investment in China, such as joint venture requirements and caps on foreign ownership in certain industries. Once the expected deal is reached, it needs to be ratified by the European Parliament, a process that may not begin until the second half of 2021. However, the European Commission reported progress on the talks with Beijing, including the core issue of workers' rights in China. This is a contentious issue given reports that China uses Uyghur Muslims detained in large numbers in the Xinjiang province as forced labor. Beijing denies these claims. Under the agreement, China is being asked to pledge to subscribe to the International Labour Organization's rules on forced labor. An EU-China agreement is expected to cause frictions with the incoming administration of US President-elect Joe Biden. Earlier this month, the EU published a transatlantic strategy in which it urged the US to work with it to meet the strategic challenge posed by China. TW